What's going on, guys? Welcome back to a brand new inter-equity trading video. Today is going to be a video that's been long awaited. Everyone is commenting it. This video will be on liquidity blocks, the way we enter the market, the levels that provide us our stop loss placements. I'm going to simplify it as much as possible so you guys understand everything about our entries. Okay, so first we're gonna use a diagram to make sure you guys understand what is a liquidity block, the logic behind it, and how we use it, of course. First, we will use a diagram for a bullish example. So let's just say the market is trending to the upside, moving higher, taking out previous highs, okay? And then all of a sudden we print a low. Again, we go higher, printing new highs, and then we get a sell-off, and we get this occurring. Center this up in the screen. Let's talk about this. You can see how we were swiftly moving up to the upside, printing new highs in the market, pullback, new high, and then finally sell-off, grabbing a low here, inducing sellers. Why does this induce sellers? They are going to view this to be a BOS. This level is going to be a trap for them, so we'll make it that a red box. You guys should know that by now. And then we stab out the liquidity, and boom, that is where the liquidity block is now created. Now we can use this level as a future entry, or what you can do is use the lower time frames and find an entry in this high. That is all a liquidity block is in a bearish example here. Okay, because again, we swept the highs and moved down, so it's a bearish liquidity block, of course. And that's all it is. Nothing too complicated, so I don't want you guys to overcomplicate things. Keep it as simple as possible. But again, lows taken out, boom, we sweep out the liquidity and we leave this high. Now, since we have swept out previous liquidity, now we view this high right here to hold no liquidity, meaning we don't have a reason to run above it. So that's the logic behind it, to help you understand this as much as possible. All I have to do for a bullish one is invert this, and there you are. So same thing. We are selling off to the downside. Here's a high, low, low. Market runs bullish. We take out a high, and boom, sell off to the downside, and we run a level of liquidity. Now, remember, since we have run this previous low, aka level of liquidity, now this low that we just marked on, we view to have no liquidity. So that is now going to be used as a liquidity block. Again, you have the option of using whatever, this whole area in the future as an entry, or in the lower time frames, you would open up price action and dissect what's going on in this low on the lower time frame. So let's just say this is a M15 or H1 time frame. You could go into the M1 in here, right? And try and find yourself some sort of entry back up to the upside. However you want to look for your entry, but that's just a good example of refinement in here, or you use this whole area in the future as an entry. Okay, and again, this is a bullish one. What we previously went over would be that bearish one. Okay, so now we understand what is a liquidity block.